and you need materials so that you can be able to convert them into finished goods so that you can sell. So, when you talk about materials, what comes into our minds is the inventory. And we need to know why farms keep inventory. There are three general kinds of stocks that farms keep. So they keep stocks because of various reasons. For example, you have buffer inventory. But this farm, they keep the inventory to protect themselves against uncertainties of demand and supply. Because you don't know. Like the companies that buy maize, they sell unga. Right now they are buying maize, they have a buffer stock of maize. Okay. Because they don't know about the supply and demand in March and the June there. Okay. That is a buffer inventory. We have anticipatory. Some farms, they keep some items of stock in anticipation that the future demand for them will happen. So the whole idea behind the anticipation inventory is to smoothen the production process. So it is attained by producing for a longer duration, for continuous basis, rather than operating with excessive overtime in a period, leaving the system to be idle. So what happens? Like things like umbrellas, those are seasonal demand, isn't it? But you'll find that even right now when you don't have rain, they're still producing, anticipating that the demand will rise at a certain period, and then that they will continue supplying, rather than staying idle right now, and then when demands come, they start producing with overtime. Get it? Yeah, that is anticipatory inventory. We have appreciation inventory. This one, the farm sold inventory in anticipation of an increase in price. So some items of inventory, such as wines and spirits and jewelry, appreciate in value the longer they are kept in a warehouse. However, quantitative models do not take into account the appreciation inventory. We don't account for appreciation inventory, but you'll find that farms, they keep the inventory at this point. Inventory not wanaweka stock saa hii hapo kwa sababu demand itarise December, price itarise December, isn't it? That is anticipatory appreciation inventory. We have now the inventory decisions, and inventory management is very important because inventory represents the largest single investment. That is the item that holds most of the investment of the company. So we need very proper management. And the major types of inventory, we have the inventory of raw materials, the inventory of work in progress, and the inventory of finished goods. So, what is work in progress? In the process of producing unga, you start with maize, then inasiagwa inatolewa ngozi, afisa inasiagwa ndio inakuwa unga, isn't it? Hii process ya katikati, hiyo stock yenye kwa sababu kuna stock yake, isn't it? Itaitwaje? That is a work in progress. Okay? You have to account for it. The end of that process, talking to your finished goods. So, we have to make various decisions regarding the inventory and the inventory control. So, this decision are the optimal quantity of order to make to minimize the inventory total cost. Yeah, we need to make a decision. How much stock are we going to be ordering at a go? Yeah. Instead, ya kuendelea daily, isn't it? That is one of the decisions. Another one is when to make that order. What should you make? Okay? And what commodities to stock. We have items that are slow moving. And we have the amount of safety stock to be kept in anticipation of variation of demand and supply. Those are the inventory decisions that we make. Then we also have to take the control. Material, cost, control. If you don't control that cost, you can end up tying all the funds in inventory and then you lose it. So there is need for material cost control, and materials should be controlled. Material control is more than simply recording the accounting transaction relating to material cost. Cost should be implemented to ensure the material is available in appropriate quantity, in appropriate quality, in appropriate location, in appropriate time, and at the most economical cost. So, we need to have adequate perpetual inventory records. So this needs to be maintained. They need to be maintained records for each item of inventory held in stock. Some form of stock records card will be required for each stock item, and in addition to specific material, the date and quantity of receipts issued and consequential balancing figure. So whenever we are recording the stock, we record using the perpetual inventory method. That is, you have a date, you have receipts, you have what? Issues, then balance, then you can also have remarks. Okay? So if at a certain date, at the beginning of July, you had a balance of 300 items, and now every item in the store should have a record. Okay? So if you have rice, it has its record. Sugar, its record. Salt, cooking fat, like that. Okay? So that is the balance. Then on the same day, you issue 30 in a remaining value to 70. Then on second, you issue 40 in a remaining to 30. On fifth, you get another 100 in a bit value to 30. Okay? And if there is anything you want to put a remark there, you can put a remark, you can put the receipt or the invoice number that bought this item here. Okay? So, it's all. You can say on 7, 10 units, in the back 320, these were damaged. Okay? Yeah, and so on. Then we need to check the perpetual inventory records. So this record needs to be checked. So the stockkeeper is maintaining this record on daily basis. And then the cost accountant or another officer needs to check. Unakuta huku na calculations zingine zimefanywa. Yeah. Then maintenance of target stock level. This one will help you to maintain the target stock level because we know our target. And the responsibility and authority relations. So the material should be clearly delegated to specific individuals. If more than one individual is required to operate the store, then personnel should be given responsibility of clearing the designated task. So there is a person who is responsible for this. Okay? he has been given the responsibility to maintain the stock, and he has the authority. So whenever there is any query about this, you know who to ask. Okay? Who is responsible for that? And if there are several people who are responsible for this, then you can divide their duties, who are responsible on this part and another on this part. In a big organization, we work as a team. And then reporting. Quantity of value of item held in store should be reported regularly to the organization's management. Every month, I have to take this thing and calculate and make a report that you have spent a total of 24 kgs of sugar, 5 packets of salt, and so on. So, then also for control. So the stock personnel should on regular basis compare targets with actual stock levels and take appropriate action indicated by comparison to investigate the deviation. Like why a particular stock has fallen below minimum and immediately informing those responsible. So you keep on checking. We know our minimum stock level is 200. Without control, unaweza jikuta uko na zero, isn't it? You should investigate why is it falling below. Then controls will be made so that you can know when the choice is made as to the type and quality of material to be used. You make a choice of when to purchase or when the purchase order is being placed and so on. Then let's look at stock level and its control. Minimum stock level, maximum stock level, reorder level, and reorder quantity. Minimum stock level. This is the level below which stock should not be allowed to fall. So it is essential to base the stock level. You need to know the minimum stock level, that you should not go below this level. If you want to set your level at 100 units, the minimum, we should not go below there. Okay? And this one is referred to as what? As a safety stock. So the minimum stock level, we can get it by having the reorder level minus normal consumption multiplied by normal reorder period. So this one will help you not to have what you call stock out. So stock out may be caused by various factors such as delay in the part of supplier. Yeah, the supplier. So an increase in material usage due to change in the pattern of production. Yeah, sometimes we may change pattern of production. So, yeah. You can go to step inatumia material nyingi. Okay? So unaweza kutoka na stock out. Another thing, increase in scrap levels in the production process. You know what is scrap level? Scrap. In the production of unga, una ile waste, isn't it? If it increases, it means what? So that you produce the number of finished products that you produce, you need more stock, isn't it? So, unaweza kuwa na stock out. Yeah, materials, raw materials, na pia nakuwa na stock of the finished goods to produce kidogo. And so on. We have maximum stock level. This is the upper limit, above which stock should not be allowed. Yeah. Again, you should not have too much stock. Unapanya. Half of it. So this is the upper limit that should not be allowed to exceed, and each material to be kept in stock must have a maximum level and stock should not to be allowed to go beyond this level. So if stock goes beyond this point, then the farm will be overstocking and incur high holding cost. So maximum stock level, you can also calculate it. Yield level plus the order quantity minus minimum consumption multiplied by minimum order period. You need to remember these formulas. So, put them in somewhere in your mind. So, in setting the maximum stock level, the cost accountant must take into account various other factors that may act as constraints. And this includes the nature of the materials being stocked, the rate of consumption of materials, the lead time, and the reorder period. And you'll find that the availability of adequate storage space and the cost of storing versus the benefits derived from advantageous purchasing. So those are the things that the cost accountant should look at. Then we had the reorder level. Reorder level is the quantity of stock ordered once the reorder point is reached. So when you reach the reorder point, how much should you order? What quantity should you order? So the quantity is such as to minimize stock costs, taking into consideration the cost of holding and making an order. So we have an example of the economic order quantity model. It's a good example of the order quantity. So our order quantity is equals to maximum stock minus reorder level minus reorder level plus minimum usage times minimum reorder period.